Hello, my name is Mayanka. I am accounts and finance trainer from Uplatz. Today, we will discuss the topic of Provident Fund. What is the meaning of Provident Fund and what is the amount which will be taxable under the head of salary? As per the provision of salary head, any of the amount which is paid by the employer to the employee will be taxable under the head of salary. So the provident fund is also an amount which is paid through the employee, through by the employer to the employee. So in this case, it will also be taxable under the head of salary. In this class, we will discuss what is a provident fund and taxability of provident fund. Means how much amount will be taxable under the head of salary and what amount will be exempted under the head of salary. What amount will be exempted under the head of salary. So now we will start our discussion on the Provident Fund. We will discuss what is Provident Fund and what is the taxability of Provident Fund. Taxability of Provident Fund. The Provident Fund is an scheme which is made by the employer to provide the substantial benefits. Provident Fund is an scheme which is made or which is developed by the employer to provide the substantial interest or substantial benefits to the employee at the time of his retirement, so that the employee can get certain amount at the time of his retirement. At the time of his retirement, the employee can get the certain amounts. Under the Provident Fund scheme, a particular amount or a specific amount is deducted by the employer from his salary. Means the employer deduct the amount or particular amount of salary from the employee and deposit it in the Provident Fund as his contribution. Means under the scheme of Provident Fund, a specific amount is deducted from the salary of employee and it is deposited or it is entered into the Provident Fund account as the contribution of employee, as the contribution of the employee. And normally the same amount is contributed by the employer. Normally, same amount is contributed by the employer. For the example, Mr. Ram, he received 20,000 rupees as a salary from ABC. From ABC, Mr. Ram receiving 20,000 rupees as salary, and the amount of PF is deducted by the ABC is 1,000 rupees. And such 1,000 rupees is deposited by the company as the contribution of Ram in the PF fund. And such 1,000 rupees and another 1,000 rupees is deposited by ABC in the PF fund in the name of Ram. In the name of Ram from his pocket. Is that Mr. Ram, he is working in ABC, and he receive salary 20,000 rupees. PF deducted is 1,000 rupees. Sorry, 1,000. 1,000 is the amount is deducted by ABC from his salary and and deposit in PF fund and deposited PF fund as contribution of RAM, as the contribution of RAM, as the contribution of RAM, it is deposited in the PF fund. Similar amount 1000, similar amount 1000 deposited by ABC Limited. ABC deposited by ABC. PF fund of RAM out of his pocket, out of the pocket of employer, out of the pocket of employer. So in the case of PF, the amount, generally equivalent amount, is deposited by the employer out of the pocket of employer, out of the pocket of the employer. The amount which is deposited, into the PF means the contribution of employer and the contribution of employee are invested in the approved security. The contribution of the employer and the contribution of the employee means these 2000 rupees which are invested will be invested in the approved security. Such a 2000 rupees which are deposited in the PF account is invested in the approved security, and the amount of the interest which is received and the amount of the receipt which and the amount of the interest which is received on such approved security will also be credited to the account of employee. It will be credited to the account of employee. Thus, the credit balance of the Provident Fund of any employee consists the following amount. Thus, the account of Provident Fund contain the following amounts. Number 1, employee contribution. Number 2, employer contribution. Number 3, interest on employee contribution, and the interest on employer contribution. Is that the amount of the interest will also be credited to the PF account of employee. The PF account of employee, and the PF account of the employee will contain employer contribution, employee contribution, interest on employee contribution, and interest on employer contribution. Is that PF contribution of Mr. Ram is 1000, PF contribution of ABC is 1000. It is invested such 2000 deposited in security. Deposit in security 2000. Interest received on this security, for the example 200 rupees. So the PF fund or the PF account has number 1, such 1000 of employer contribution, such 1000 employer contribution, such 1000 employee contribution, such interest on the employer contribution, and interest on employee contribution. Employer contribution, interest on employee contribution, and interest on employer contribution. So the total amount of PF will be 2200. This is the portion of, this is the contribution of employer, this is the contribution of employee, this is the interest on employer contribution, and this is interest on employee contribution, So the total amount of the PF will include such a total amount of 2200 rupees. So the credit balance will be 2,200 rupees of PF account. So the PF account, PF fund is one of the important schemes to provide the benefit to the employee. To provide the benefit to the employee at the time of retirement. At the time of retirement. The accumulated balance of the PF is paid to the employee at the time of retirement. Means when the employee will be retired or when he will be resigned from the organization, he will receive such accumulated amount of PF. If Mr. Ram, he will retire from the organization after the certain period, then the total credit balance of PF will be credited to him. It will be credited to him. He will receive total amount of PF at the time of his retirement or at the time of his resignation. Means we cannot say that on the basis of this, we cannot say that in the PF account, half portion is of employee and a half portion of employer. So, but at the time of retirement, the employee will receive total amount. The employee will receive total amount at a time of resignation or at a time of retirement. If in the case of death, the legal representative or the legal heir, they will receive such PF amount. In the case of death of the employee, the legal representative or the legal heirs of such person will receive the total amount of PF. They will receive total amount of PF. The PF is one of the beneficial scheme for the employees. They will receive a particular amount or a amount at the time of his retirement or at the time of his resignation, and they can use such amount for any purpose after the retirement. They can use such amount. This is a one of the important source of saving. This is the one of the important source of saving. So, as per the provision of Income Tax Act 1961, it gives a certain deduction. In the case of PF account, there are certain deduction on the saving of Provident Fund. To enhance the nature of saving, the Income Tax Act 1961 also provide or gives a certain deduction in the respect of Provident Fund account. In the respect of Provident Fund account, certain deductions are also provided by the Income Tax Act. The Income Tax Act, as per the Income Tax Act, there are certain exceptions, which are certain deductions in the respect of Provident Fund. Before the discussion of such deduction, first we will discuss the type of Provident Fund. First, we will discuss the type of Provident Fund. There are four types of Provident Funds. There are four types of Provident Fund. Number one, recognized Provident Fund. Number two, unrecognized Provident Fund. Number three, statutory Provident Fund. And number four, Public Provident Fund. There are four types of Provident Fund. Recognized Provident Fund, unrecognized Provident Fund, statutory Provident Fund, Public Provident Fund. First, we will discuss recognized Provident Fund. What is the meaning of recognized Provident Fund? What is the meaning of recognized Provident Fund? The recognized Provident Fund means the Provident Fund which is recognized by the Commissioner of Income Tax for the purpose of income tax. The recognized Provident Fund is a fund which is recognized by the Commissioner of Income Tax, which is recognized by the Commissioner of Income Tax for the purpose of income tax. The Provident Fund which is recognized by which is recognized by the Commissioner of Income Tax, then it will be known as recognized Provident Fund. It is governed by Part A of Schedule 4 of the Income Tax Act. The recognized provident fund is governed by the Part A. The recognized provident fund is governed by the Part A of Schedule 4 of Income Tax Act 1961. 1961. There are some rules in the respect of recognized provident fund. In the respect of recognized provident fund, there are certain rules which are contained in Schedule 4. Is that Schedule 4 contain various rules. Schedule 4 contain the various rules regarding the provident fund. Number 1, it is contained the rules about the recognition of fund. Schedule 4 contains the provision of recognition of provident fund. Number 2, it is contained the rules and the provisions relating to the employer contribution and employee contribution. Schedule 4 of Income Tax Act. Schedule Part A of Schedule 4 of Income Tax Act contain the rules of employer contribution and the employee contribution which is made by them to the Provident Fund, and it will also contain the treatment of accumulated balance. Schedule 4 also contain the rules which are relating to the treatment of accumulated balance. Treatment of accumulated balance. So, the recognized provident fund is a fund which is recognized by the Commissioner of Income Tax for the purpose of income tax. It is governed by Schedule 4 of Income Tax Act Part 1. Schedule 4 contain following rules. Number 1, it is contain the rules which are relating to the recognition of fund. It is contain the provision relating to the employee contribution and the employer contribution, and it is also contain the provision of treatment of accumulated balance. It is also contain the provisions of treatment of accumulated balance. Accumulated balance. A fund which is made, a fund which is made under the Employee Provident Fund and under the Miscellaneous Provision Act 1952 will also be known as recognized provident fund. Is there any of the fund which is constituted under the EPF? If there is any fund which is made under the EPF, or any of the fund which is made under the Miscellaneous Provision Act, then such a fund will also be known as recognized provident fund. Then such a fund will also be known as recognized provident fund. Next is unrecognized provident fund. Unrecognized provident fund. Recognized provident fund means which is recognized by the Commissioner of Income Tax, and unrecognized provident fund is which is not recognized by Commissioner of Income Tax. If there is any fund which is not recognized by the Commissioner of Income Tax, then it will be known as unrecognized provident fund. It will be known as unrecognized provident fund, which is not recognized by the Commissioner of Income Tax. Statutory provident fund. What is the meaning of statutory provident fund? The statutory provident fund is a fund which is governed by Provident Fund Act 1925. The fund which is governed by 1925 is to be known as statutory provident fund. Such a provident fund is applicable on the government employee, semi-government employee, railway employee, local bodies employees, and universities employee, and all recognized educational institution employee. Is that statutory provident fund is a fund which is governed by the Provident Fund Act 1925, and the provision of SPF is applicable on the employee of. It is applicable to the employee of government, employee of non-government, employee of universities, employee of local bodies, employee of institute, semi-government institute, employee of any recognized educational institute. Is that is that it is applicable on the particular and the specific employee. It is not applicable on all the employees. It is applicable on particular employees. Public Provident Fund. Fourth is Public Provident Fund. What is the meaning of Public Provident Fund? Public Provident Fund is a fund which is made or operated by the Public Provident Fund Act 1960. The fund which is operated by the PF Act, which is operated by PPF, sorry. The fund which is operated by the PPF Act 1968, then such fund will be known as Public Provident Fund. Then such a fund will be known as Public Provident Fund. A membership of the PPF is open to every individual through it is ideally suited to the self-employed person. Means public provident fund can be the public provident fund can be used by any of the individual. It is used by the any of the individual. Means there is no condition in the respect of PPF that it is available for him or it is not available for him. Means any of the individual can open PPF account. He can open the PPF account, but he should be, but such person should be ideally suited to self-employed. He should be suited to the self-employed. A salaried person. If any of the salaried person wants to open the PPF account, if any of the salaried person, if he wants to open any PPF account in addition to the fund which is operated by the employer, he can also open it. Means a salaried employee may also contribute to the PPF account. He may also contribute to the PPF account. Means it is not mandatory he should be self-employed. If he is the salaried person and if he want to contribute in the PPF account in addition to the fund which is operated by the employer, then he can also contribute in PPF account. If there is any individual who wants to invest or who and if there is any person, if he want to contribute in the PPF account, he can contribute the amount to the PPF account. The individual can contribute in the PPF account by himself, means on the behalf of himself. He can invest or he can contribute in PPF account on the behalf of his child, on the behalf of any minor. Is that if any of the person wants to contribute in the PPF account, he wants to contribute in the PPF account on his own or by the minor, he can do so. He can contribute in PPF account. He can contribute in the PPF account. In the case of PPF account, if any person invests or contribute any of the amount in the PPF account, then such individual is eligible to take the deduction. He is eligible to take the deduction under section 80C. Under section 80C, such employee is eligible to take the deduction under section 80C. Under section 80C. For getting the deduction under section 80C, a member is required to contribute under the PPF account, and the amount which is contributed by him should not be less than 500 rupees in a year. in a year, the amount of PPF which is contributed by the member should not be less than 500 rupees. Means minimum 500 rupees is required to be deposited in the PPF account to take the deduction under PPF. If any person wants to take the deduction of ATC of PPF, then he should invest at least 500 rupees in a year in such a account. In such a account. As per the provision of PPF, the maximum deduction is 1,50,000. The maximum amount. The maximum amount of deduction will be 1,50,000 as per the PPF rule. As per the PPF rules, the maximum amount that may be qualified for the deduction under section 80C is 1,50,000. Is that the minimum amount which is required to be deposited in PPF account is 500, and the maximum amount of deduction is 1,50,000 as per the PPF rule. As per the PPF rule. A member of PPF, if there is any person, he has a PPF account, he may deposit his contribution in as many installments. If there is any person or there is any member, he has a PPF account and he want to deposit the amount in the installment, then he can deposit it in the installment, and such installment should be in the multiple of 500. Such installment should be in the multiple of 500, means it may be 500, 1000, 1500, 2000, 5000, 5500, means it should be in the multiple of 500. If Mr. Ram, he has a PPF account, and he want to invest the money in such PPF account in the installment. He wants to deposit such amount in the installment. So for the purpose of this, he can deposit the amount in PPF account in the installment, but the amount of the installment should be in the multiple of 500. It should be in the multiple of 500. The amount of the contribution which is made by the person in the PPF account may be paid at any of the office or branch office of the State Bank of India. The amount of contribution may be paid at any of the office, means when Mr. Ram want to, the amount of contribution may be paid at any of bank account, any of the branch or any of the office of SBI or its a subsidiary and specified branches of bank or any post office. Means if Mr. Ram, he wants to deposit the amount of PPF, then such amount of PPF is required to be deposited or paid to any of the branch of SBI, to any of the office of SBI, or to any of the subsidiary of SBI, or any of the branch or any of the bank or post office which is specified. So in the case of PPF account, the PPF can be opened by any of the person. He may contribute any of the amount, but for the deduction under section 80C, the minimum contribution should be 500 rupees in a year. Minimum contribution is 500 rupees in a year. There is no limit of maximum, but the minimum should be 500. As per the provision of PPF, as per the rules of PPF, the maximum deduction is 1,50,000. The maximum deduction is 1,50,000, and if there is any person who wants to contribute in PPF account in the multiple installment, that he can do so, but such multiple installment, such installment should be in the multiple of 500. It should be in the multiple of 500, and such installment can be deposited in any of the branch of SBI, in any of the office of SBI, and any of the in any of the subsidiary of SBI, or recognized or specified post office, or any of the branch or bank which is specified, which is specified. So this is the PPF. Now we will discuss the tax treatment. Now we will discuss the tax treatment. Before the discussion of tax treatment, we have discussed four PPF, four funds. Number one, recognized, which is a recognized PF, which is recognized by the Commissioner of Income Tax. Unrecognized Provident Fund, which is not recognized by the Commissioner of Income Tax. Statutory Provident Fund, which is for the specific employees, which is for the specific employee, and which is governed by Provident Fund Act 1925. And PPF, which can be open, or in the PPF any of the person can contribute, whether he is self-employed or whether he is employed. So now we will discuss the tax treatment. Now we will discuss the tax treatment of all these PF, all these PF accounts, all these PF accounts. Particulars. Number one is employer contribution. In the first, we will discuss the tax treatment of employer contribution. Employer contribution. In the case of recognized provident fund, what will be the treatment of employer contribution? What will be the treatment of employer contribution? Amount in excess of 12% of salary is taxable. If the amount of contribution which is made by the employer is more than, if the contribution which is made by the employer is more than 12% of salary, then it will be taxable. Amount in excess of 12% of salary is a taxable. For the example, Mr. A, he is working in XYZ. He is working in XYZ. Contribution, recognized PF fund, contribution made by A, it is 1000, and by XYZ is also 1000. Total salary is approx 40,000 rupees. So the contribution is it is 2.5%. 2.5%, which is less than 12% of salary. Salary is 40,000, which is less than 12%. So it will not be taxable. But if the contribution by XYZ is contribution by XYZ is 6,000 rupees. So it will be 15%. It will be 15%, which is more than 12%, which is more than 12%. Means that 12% is 40,000 is the 12% is 4,800, but the amount of contribution is 6,000. Then the taxable amount will be 1,200. Such 1,200 will be taxable because it is more than 12%. It is more than 12%. If he contribute, if Mr. XYZ contribute, if XYZ contribute 4,800, nothing will be taxable because it is up to 12%. It is up to 12%. But if he contributes 6,000, which is more than 12%, then 1,200 rupees will be taxable in the hands of employee. It will be taxable in the hands of employee. Exceed amount of contribution will be taxable. Exceed amount in excess of 12%. Amount in excess of 12% will be taxable. It will be taxable. In the case of recognized provident fund. In the case of recognized provident fund. And in the case of unrecognized provident fund. In the case of unrecognized provident fund, nothing will be taxable. It will not be taxable in the year of contribution. In the case of unrecognized provident fund, any of the amount contributed by the employer to the recognized provident fund, nothing will be taxable. Nothing will be taxable. In the case of statutory fund, any of the contribution which is any of the contribution of employer, is fully exempted. Means it is fully exempted. Nothing will be taxable. In the case of PPF, no provision of employer contribution because the PPF is an account in which the person contribute his own part, his own contribution. There is no question of employer contribution. In the case of PPF, there is no any question of employer contribution. In the case of PPF, only the amount, only the person he will contribute his part. Only his part is contributed by him. There is no question of employer contribution. So in the case of recognized provident fund, the amount which is excess of 12% will be taxable. In the case of recognized provident fund, nothing will be taxable. In the case of unrecognized provident, nothing will be taxable. In the case of statutory provident fund, fully amount will be exempted. Employer contribution will be fully exempted. And in the case of PPF, there is no question of employer contribution because there will not be any employer contribution. Employee contribution. In the case of recognized provident fund, the portion of the employee contribution to the recognized provident fund is fully exempted. Is fully exempted under section 80C. Means the deduction under section 80C is available in the respect of contribution of employee to the recognized provident fund, eligible for the deduction under section 80C. Is that if there is any contribution which is a contribution by A, 1,000 rupees, contribution which is made by A, 1,000 rupees, it will be exempted under 80C. Means the deduction under section 80C, deduction under section 80C is available. Means it will be exempted under section 80C. It will be exempted under section 80C. In the case of recognized provident fund, no taxability is there. Sorry, not eligible for deduction. Not eligible for deduction means no deduction is available. No deduction is available. In the case of statutory fund, deduction or deduction under section 80C is available. Deduction under section 80C is available, and in the respect of PPF, deduction is also available. Is that if there is any contribution which is made by the employer to the recognized provident fund, to the statutory provident fund, and to the public provident fund, then he is eligible for the deduction under section 80C. He is eligible for the deduction under section 80C. Under section 80C. For the example, Mohan, he contribute 10,000 rupees. He contribute 10,000 rupees in recognized provident fund, in unrecognized provident fund, 10,000, 10,000 in statutory provident fund, and 10,000 in PPF. He is as employee. He is an employee. As employee, he contributes this amount. So in this case, 80C allowed. Deduction under 80C allowed. Not allowed. In the case of SPF, specified provident fund, allowed. And in the case of PPF, allowed. Only in the case of unrecognized provident fund, such a deduction is not allowed. Only in the case of unrecognized provident fund, such a deduction is not allowed when there is any contribution made by the, when such contribution is made by the employee. When such contribution is made by the employee, the deduction is not allowed. The deduction is not allowed under section 80C. In all other cases or in 3 parts, the deduction under section 80C is available. Only in the case of unrecognized provident fund, deduction under section 80C is not available. Now we will discuss the tax treatment of interest. Tax treatment of interest credited. So in the case of recognized provident fund, amount in excess of 9% per annum is taxable. Amount of the interest which is more than 9.5% is taxable. If the tax rate is, 10%, then 0.5% will be taxable. 0.5% will be taxable. For the example, total deposit in recognized provident fund, is 1 lakh rupees. Total deposit in recognized provident fund is 1 lakh rupees. Interest received 10,000, which is more than 9.5%. Which is more than 9.5%, because it is a 10%. Sorry. It is a 10%. But if it is more than 9.5%, then it will be taxable. The excess amount will be taxable. So The 9.5% is the 9.5% is a 9,500. So the excess amount is 1,000, 10,000, 9,500 rupees. Such a 500 rupees will be taxable. Such a 500 rupees will be taxable in the name of interest. In the name of interest from recognized provident fund, such 500 rupees will be taxable because it is more than 9.5%. Because it is more than 9.5%. So such 500 rupees will be taxable. Such a 500 rupees will be taxable. In the case of unrecognized provident fund, in the case of unrecognized provident fund, there is no taxability. In the case of unrecognized provident fund, there is no any taxability in the respect of interest. In the case of statutory provident fund, it is fully exempted. The amount of the interest is fully exempted. And in the case of PPF, fully exempted. In the case of PPF, fully exempted. Fully exempt. Note the salary for this purpose, 12% of salary, 9.5% of salary, sorry, 12% of salary. What is the meaning of salary? Salary means basic salary plus DNS allowance. Basic salary plus DNS allowance, and the DNS allowance which is provided in the term of employment for retirement benefits, and commission as a fixed percentage on term. Fixed percentage of term. Is that salary is equal to basic salary plus DNS allowance, which is for the retirement benefit, plus fixed percentage of commission on term. So this is the meaning of salary for the purpose of this. So this is the tax treatment of PF. This is the tax treatment of PF. Tax treatment of employer contribution, tax treatment of employee contribution, and the tax treatment of interest. Tax treatment of interest. Now we will discuss what will be the tax treatment at the time of retirement. At the time of retirement, this is the tax treatment at the time of contribution. At the time of contribution, and now we will discuss what will be the tax treatment. What will be the tax treatment at the time of retirement? Because at the time of retirement, the employee will receive the amount of PF. At the time of retirement, the employee will receive the amount of PF. So what will be the tax treatment? What will be the tax treatment? First, we will discuss tax treatment in the case of recognized provident fund and PPF and statutory provident. The amount of recognized provident fund, the amount of public provident fund, and the amount of statutory provident fund is received by the assessee at the time of retirement or at the time of termination or resignation. Then such amount will be fully accepted. Such amount will be fully accepted. If there is any payment which is received from the recognized provident fund, from the PPF, or from the statutory provident fund at a time of retirement or otherwise, then such amount will be fully accepted. Then such amount will be fully exempted as per section 10 subsection 11 and section 10 subsection 12. As per section 10 subsection 11 and subsection 12 is that at the time of retirement, at the time of retirement, Ram received 1 lakh rupees from recognized provident fund, 2 lakh rupees from public provident fund, and 1,50,000 rupees from specific provident fund. In this case, at a time of retirement receive 1 lakh recognized provident fund, 2 lakh rupees from public provident fund, and 1,50,000 rupees from statutory provident fund. Then all these amount will be fully exempted under section 10 subsection 11 and subsection 12. It will be fully exempted. It will be fully exempted. So any of the amount of recognized provident fund, public provident fund, statutory provident fund received by the person at the time of retirement, then it will be fully accepted. It will be fully exempted from tax. No tax will be calculated on such a received amount. Section 10, subsection 11, PF Provident Fund to which PF Act 1925 applies. Public Provident Fund and the accumulated balance which is payable to the employee who is participating in recognized provident fund, who is participating in recognized provident fund is that the amount which is received from recognized provident fund, which is received from public provident fund, and which is received from provident fund, which is which is regulated under the Provident Fund Act 1950, 1925, then such amount will be exempted from tax. It will be fully exempted from tax. So now we will discuss exemption of accumulated balance of recognized provident fund payable to the accumulated balance of recognized provident fund which is payable to the employee. We will discuss recognized provident fund on the basis of such chart. Number 1 point, has the employee rendered continuous service at the least of 5 years with the employer? This is the flow chart, and on the basis of such flow chart, we will discuss the full concept of recognized provident fund. In the case of recognized provident fund, there is the condition that the minimum period of term or the minimum period of service should be at least 5 years. The minimum period of service at least 5 years. If it is 5 years, then it will be fully accepted. If any of the amount of recognized provident fund is received and such employee works as an employee in the organization for the period of 5 years, continuous period of 5 years or more. If yes, then such amount of recognized provident fund, such an accumulated amount of recognized provident fund will be accepted. It will be fully accepted. It will be fully accepted if he has not completed 5 years. If he has not completed 5 years, in this case, are his service terminated due to first his illness, is he has terminated from his services due to the illness or due to the contraction or discontinuation of employer business. He left his job due to the illness or due to any discontinuation of employer business or due to the any other reason which is beyond the control of the employee, which is beyond the control of the employee. For example, Mr. Ram, he left his job before the completion of 5 years due to his illness, means he suffered by the cancer, and he is not eligible to perform the service. So he left a job before the completion of 5 years. So in this case, this reason is out of his control. Out of his control. So in this case, the amount of recognized provident fund will be fully exempted. It will be fully exempted if the reason is out of control. If the reason is not out of control, means he left his job due to the any other reason. Means he want to join another organization. He want to join another organization. So that he left the job. So in this case, number one, the entire balance which is standing to the credit of employee transfer to his individual account. If such amount if such amount of accumulated balance of recognized provident fund is credited to the employee's individual account in any recognized provident fund which is maintained with his new employer. If he has joined a new organization, if Mr. Ram he has joined new organization, if such a new organization also have a provision of RPF, if such a new organization also have the provision of RPF, and the amount of accumulated RPF is credited, the accumulated balance of RPF is credited to the in this company, then such amount will be accepted. Then such amount will be exempted. Otherwise, it will be taxable. And number two is the entire balance which is standing to the credit of RPF account transfer to his NPS account. Which is referred to in section 80 CCD and notified by the central government. If yes, then it will be exempt. Otherwise, it will be taxable. We will discuss such concept by the way of example. Example is Mr. Mohan. He is working in a organization which is to be known as ABC. He performed the service. He performed his services for the period of 3 years. For the period of 3 years. He performed his services for the period of 3 years. Or it may be for the period of 8 years. First, we will take 8 years. So, in this case, after the 8 years, he wants to be retired. So, in this case, the total amount of, he has received, the total accumulated balance of recognized provident fund is 5 lakh rupees. Accumulated PF is 5 lakh rupees, then it will be fully exempted. It is fully accepted. This is the first point. The second point is, this is the first point. If he performed the service for the period more than 5 years. So in this case, the accumulated amount of recognized provident fund will be fully exempted. It will be fully exempted. Number 2, Mohan, Mohan, he performed his service, time of service. Time of service is, for the example, 3 years. 3 years. 3 years. After 3 years, he wants to be resign or retire. Wants to be retired due to the illness. Means now he can't provide any service. And at the time of his retirement, accumulated balance of recognized PF is 2,50,000. 2,50,000. Then it will be fully exempt. It will be fully exempt because he want to be retired due to the illness. And this reason is out of his control. So it will be fully exempt. Number 3, Mohan, he time of the services 3 years. Time of the services 3 years. Now he want to left his job. He wants to be retired. Now he wants to be retired. And accumulated balance of recognized provident fund is 2,50,000. 2,50,000. The first point is he wants to be retired. He wants to be resign or he wants to be resign. He wants to be resign because he will join. He will join XYZ. He will join XYZ. And such XYZ also have recognized provident fund provision. If it is also have recognized provident fund provision, and such a 2,50,000 created to such a RPF account. It is created to RPF account of Mohan in XYZ. Then in this case, such 2,50,000 will be fully exempt. It will be fully exempted. If such 2,50,000 if XYZ does not have provision of recognized provident fund, then such a 2,50,000 fully taxable. It will be taxable. It will be taxable. It will be fully taxable. Next point is Mr. Mohan. Mr. Mohan. He is work in an organization for the time of services 3 years. Time of service of 3 years. Then the time of period of 3 years, and the balance of balance of balance of RPF is 1,50,000. 1,50,000 rupees. And he wants to left the job. He wants to resign. He wants to resign due to any reason, due to any of the reason. And such amount of 1,50,000 credited to his NPS account. His NPS account, then such 1,50,000 will be fully accepted. It will be fully exempted if not credited in NPS account, then it will be taxable. Then it will be taxable. If it is not created in NPS account, if it is not created in the NPS account which is recognized by central government, then it will be fully taxable. So, as per the first case, if he has completed year, he is completed 5 years or more than 5 years, then it will be fully exempted. Then such a accumulated balance of recognized provident fund will be fully exempted. It will be fully exempted. If he want to resign before the 5 years, due to any unavoidable reason, then it will be then accumulated balance of recognized provident fund will also be fully exempted. If Mohan, if he wants to resign before the completion of 3 years, then such amount of accumulated balance will be exempted if such amount is credited to the recognized provident fund account in other organization in which now he will join, then it will be fully exempted. But if such organization does not have the provision of recognized provident fund, then such amount will be fully taxable. And the next, he complete the service of 3 years and he want to be resigned. If such amount of accumulated provident fund is created to NPS account, then it will be exempted, otherwise it will be taxable. Then it will be exempted, otherwise it will be taxable. So this is the full concept of accumulated balance of recognized provident fund. Accumulated balance of recognized provident fund which is payable to the employee. Where when the amount of accumulated recognized provident fund become taxable, when it become taxable, then the tax is required to be paid in each of the year, would be computed as if the PF had been an unrecognized provident fund, and the difference in the tax would be payable by the employer. When the accumulated balance of recognized provident fund become taxable, then the tax payable in each of the years would be computed as it is a unrecognized provident fund. Means it will not be considered as a recognized provident fund for the purpose of tax payment. It will be considered as a recognized provident fund. And the difference in the tax would be payable by the employer. And it would be payable, the tax would be payable by the employer. If after the termination of his employment with one employer, the employee opting employment under the another employer. If Mr. A left the job or terminated the job from ABC Limited and he joined XYZ Limited, then only so much of the accumulated balance in the recognized provident fund will be exempted, which is a transfer to his individual account to the recognized provident fund. Only the amount which is transferred, according to the question, it was 2,50,000. So only such 2,50,000 will be exempted, which will be transferred to the recognized provident fund, which is maintained by the new employee. Is that as per the point 3, Mr. Mohan, he resigned and he joined XYZ Limited. And in XYZ Limited, there is also the provision of a recognized provident fund. So these 2,50,000 is credited to recognized provident fund account of new organization. So only this 2,50,000 will be exempted. Only this 2,50,000 will be exempted. Other amount will not be exempted. Means the another amount will also be deposited in such PF account. It will not be exempted. Only such 2,50,000 will be exempted. In such a case, for the exemption of payment of accumulated balance by the new employer, the period of service with the former employer shall also be taken into account for computing the period of 5 years. So, for the purpose of exemption of the payment of accumulated recognized provident fund by the new employer, the period of service with the former employee will also be taken. When he will compute the period of 5 years, means such 3 years, as per the example, the 3 years will also be computed when the new employer will compute the 5 years. When he will compute the 5 years, such a period of 3 years will also be considered by him. Now, we will discuss what will be the tax treatment in the case of unrecognized provident fund in the case of retirement. At the time of retirement, what will be the tax treatment of unrecognized provident fund? What will be the tax treatment of unrecognized provident fund at the time of retirement? When there is any amount which is received on the maturity of unrecognized provident fund, when the amount is received from the unrecognized provident fund, the amount received from unrecognized provident fund, then such amount, then the taxability of the amount will be: employee contribution will not be taxable. The contribution of employee will not be taxable. Interest on employee contribution will be taxable under the head of income from other sources. Employee contribution will not be taxable. The interest on employee contribution will be taxable under the head of income from other sources, and employer contribution and interest on employer contribution will be taxable under the head of salary. Is that for the example, Mohan, he is working in XYZ Limited. He has received the amount of unrecognized provident fund. He received 5 lakh rupees. unrecognized, sorry, he received 5 lakh rupees at the time of maturity of unrecognized provident fund. In this 5 lakh rupees, the employee contribution, the employee contribution is 2 lakh. Employee contribution is 2 lakh. Employer contribution is also 2 lakh. Interest on employee contribution is 50,000 and interest on employer contribution is also 50,000. So the total amount is 5 lakh. The total amount is 5 lakh. So in this case, he has received such amount. He received such amount. So the employee contribution, it will not be taxable. Not taxable. It will not be taxable. Such amount will not be taxable. It will be taxable under the head of salary. It will be taxable under the head of salary. Employer contribution, it is interest on employee contribution. Interest on employee contribution, it will also taxable. It will also taxable under the head of income from other sources. Income from other sources. And such amount will be taxable. Interest on employer contribution. Interest on employer contribution will also be taxable under the head of salary. Interest on employer contribution will also be taxable under the head of salary. So such 5 lakh rupees, out of such 5 lakh rupees, 3 lakh will be taxable. Only employee contribution will not be taxable. Otherwise, employer contribution will be taxable under the head of salary. Interest on employer contribution will also be taxable under the head of salary, and 50,000 will be taxable under the head of other sources. Is that 2,50,000 taxable under salary head, and 50,000 taxable under other sources. It will be taxable under the other sources. So this is the taxability of the unrecognized provident fund. This is the taxability of unrecognized provident fund at the time of maturity. Now we will discuss an example. Now we will discuss it by the way of example. Mr. A retired from service on December 31st, 2020. He retired from the service on 31st December 2020 after 25 years of service. After the 25 years of service. Following are the particulars of his income and the investments for the year 2021. Basic pay 16,000 rupees per month for the 9 months. April to December, 1,44,000 rupees. DNS allowance 50% form part of retirement benefit. 50% form part of retirement benefit. Total DNS allowance 8,000 rupees per month into 9 months. It is 72,000 rupees. Lump sum payment received from the unrecognized provident fund. Payment received from unrecognized provident fund is 6 lakh. Deposit in PPF account 40,000 rupees. 40,000 rupees is a deposit in PPF account. Out of the amount which is received from a recognized provident fund, means out of 6 lakh rupees, the employer contribution is 2,20,000 and the interest on employer contribution is 50,000 rupees. So this 2,20,000 and this 2,20,000 and such a 50,000 means total 2,70,000 will be taxable under the head of salary. Under the head of salary, the employee contribution was 2,70,000. It will not be taxable. It will not be taxable. And interest of 60,000, it will be taxable under the head of income from other source. What is the taxability portion of the amount which is received from recognized provident fund in the hands of A? As per the question, we need to determine the taxable portion of recognized provident fund. So 2,20,000 plus 50,000, the amount of interest, total 2,70,000 will be taxable under the head of salary. 2,70,000 employee contribution, it will not be taxable, and 60,000 it will be taxable under the head of income from other sources. Is that solution? Taxable portion of the amount of unrecognized provident fund in the heads of A for the previous year, for the assessment year 2021 and 22. The amount which is taxable under the head of salary. Under the head of salary, the taxable amount will be contribution of employer contribution, employer's share in the payment received of unrecognized provident fund, which is 2,20,000 plus interest on employer contribution. Interest on employer contribution 50,000. So the total amount which is taxable under the head of salary is 2,70,000. 2,70,000. And the amount which is taxable under the head of income from other sources is 60,000 rupees. 60,000 rupees. So the total amount which is taxable is 3,30,000. Total amount which is taxable is 3,60,000 in the hands of A. So in the hands of A, there is a note that the employee is not eligible for the deduction under section 80C for the contribution of unrecognized provident fund at the time of such contribution. The employee share received from unrecognized provident fund, it will not be taxable at the time of withdrawal. Because it is already have been taxed as his salary income. It is already taxed. So now it will not be taxed again. So the amount of income, so the amount of unrecognized provident fund which is taxable under the head of salary is 2,70,000 and which is taxable under the head of income from other sources is 60,000. Now there is another example. Will your answer be any different if fund maintained above was a recognized provident fund? If the amount is received from recognized provident fund, not from unrecognized provident fund, then there is any change in your answer. So in this case, the amount will be totally exempted, since the fund is the recognized fund and the maturity is received after the period of 25 years. So in this case, the entire amount of 6 lakh which is received on maturity, will be fully exempted. It will be fully exempted from tax. In the case of recognized provident fund, when the amount is received which is received on maturity, then it will be fully accepted. It will be fully accepted from tax when it is received on maturity. Now we will discuss another example. We will discuss another example. Mr. B is working in XYZ Limited and he has given the following detail in the respect of his income for the previous year 2021. On the basis of this, we are required to calculate gross salary. Calculate the gross salary. There is a requirement to calculate the gross salary. Basic salary is 10,000 rupees per month. Basic salary is 10,000 rupees per month. Dearness allowance 8,000 rupees per month. 50% for the retirement. Commission 1%, sorry, 0.1% of turnover. The turnover is 50 lakh rupees. Turnover is 50 lakh rupees. Bonus 40,000 rupees. The amount of bonus is 40,000 rupees. Gratuity 25,000 rupees. His own contribution to recognized provident fund. His own contribution means the contribution of B in the recognized provident fund is 20,000. And employer contribution, and the employer contribution is 20% of his basic salary. 20% of his basic salary. Interest which is accrued in recognized provident fund is a 13% per annum. 13% per annum, which is 13,000. Which is 13,000. So in this case, there is a requirement to calculate gross salary. Basic salary is 10,000 per month and 10,000 into 12 because we will calculate for the previous year 2021. So it will be basic salary will be 1,20,000. It will be 1,20,000. DNS allows 8,000 rupees per month. 8,000 rupees per month. So it will be 8,000 into 12. 8,000 into 12. It will be 96,000 rupees. It will be 96,000 rupees. Commission 0.1% on turnover. Turnover is 50 lakh rupees. So 50 lakh into 0.1%, which is 5,000 rupees. Which is 5,000 rupees. Bonus 40,000. Bonus is 40,000. The next point is gratuity 25,000. The concept of gratuity is already covered by us in our previous video. So the gratuity is 25,000 rupees. There is a note in the respect of gratuity that gratuity received during the service. If any amount of gratuity received during the service, that it will be fully taxable. It will be fully taxable. So such amount of 25,000 will be fully taxable. Such amount of gratuity will be fully taxable. Employee contribution to recognized provident fund, it will not be taxable. Employee contribution to recognized provident fund, it will not be taxable because it is already taxed as salary. Sorry, employee contribution to recognized provident fund is not taxable. It is eligible for the deduction under section 80C. Under section 80C, it will be eligible for the deduction. The next is employer contribution to recognized provident fund. Employer contribution to recognized provident fund. 20% of 1,20,000 because the contribution is 20% of basic salary. 20% of basic is 1,20,000. So 20% of 1,20,000, but it is exempted up to 12%. Up to 12%. So the 12% is 1,20,000 into 12%. It is 1,20,000 into 12% is 1,20,000 of basic plus DA plus commission. So the 1,20,000 plus DA, total DA is 96,000 plus 96,000, but 50% for the retirement benefit. So 96 into 50% plus commission on turnover was 5,000 rupees. So the 12% of 12% of salary, 12% of salary. According to the provision of recognized provident fund, the salary means basic salary plus DNS allowance, which is forming part of retirement benefit, plus commission, which is based on the turnover. Certain percentage of commission, which is based on turnover, according to which the total salary is 1,73,000. Total salary is 1,73,000 rupees. 12% of 73,000 rupees. 12% of 1,73,000 rupees is 20,760. It will be exempted and the balance will be taxable. Balance will be taxable. So the balance is 3,240 rupees. It will be taxable. It will be taxable. Next, interest accrued in recognized provident fund. Interest accrued on recognized provident fund is 13%. Means 13,000. As per the provision, 9.5% will be exempt, and more than 9.5% will be taxable. As per the provision which is discussed by us in our previous slides, only 9.5% interest will be exempted. More than 9.5% will be taxable. So the 9.5% is 95,000. So 3,500 will be taxable. 3,500 rupees will be taxable. So the total amount of gross salary is the total of all these amount. Is it 2,92,740 rupees? 2,92,740 rupees. So the total amount of gross salary of Mr. B for the assessment year 2021 to 22 will be 2,92,740. So on the basis of such example, we have covered the provision of gratuity, the provision of recognized provident fund, employer contribution and the employee contribution, and we have also discussed interest, means how much interest will be exempted or how much interest will be taxed. So such notes are covered by us. So on the basis of such discussion, we have understand the concept of provident fund. We have understand the concept of provident fund, taxability of provident fund, exemption in the respect of provident fund, taxability when at the time of contribution, what will be the taxability when contribution made, and what will be the taxability when amount is received at the time of maturity, and what will be taxability at the time of retirement. And we have also discussed that type of provident fund. There are 4 types of provident fund, and all these types are properly discussed by us. So in this case, by the way of this class, we have understand the full concept of provident fund. Thank you so much for watching this video. Okay, bye bye and have a nice day.